you're a home buyer, somebody or a young person looking to buy a home, you need a bit of a reset.
There is a possibility on the other side of this that inflation could actually be quite
The
low.
housing market right now is absolutely screwed. We have demand down, we have payments up, we have active inventory up, we have sales in the absolute gutter, but yet prices are still going up. What exactly is happening with the housing market? Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and the data is in. And today we're going to go over Zillow's housing market update report from January, because everyone in America seems to only be using Zillow for their data. So that's exactly what we're going to review today. I'm going to offer you my own perspective as we go through the data as well. And don't forget, you guys, if you find value in this video, just hit like. It really, really helps out my channel. And if you find extra value, please share it as well. But whether you find it valuable or not, please comment. I absolutely appreciate you guys. And a big shout out to Jason Walter for helping me with my editing. You guys, I've been sick for the last week. I could not have put out videos without that man. If you guys are interested in editing, go over to his channel on YouTube called Jason Walter and ask him about his editing service. Now, the name of the January report is Home Shopping Early May Pay Off as Price Cuts Abound. January 2024 Market Report. Expensive coastal and western markets are already heating up as spring season approaches. I see it, honestly, guys, I'm not lying to you here. I see it in my own local house market. I see a bump in activity before spring home buying season has even started. So thank God that the market is now pricing in only 3 rate cuts this year. And thank God that interest rates are in the 7s, because for some reason we still have to cool down some home buying. There's just not enough inventory to really sustain any buying right now. Literally no buying. We need our price discovery to sustain before I would really recommend the average person even gets back into the market. We don't even have our price discovery. But back to Zillow. All right, couple snippets here. Buyers and sellers both should prepare for a competitive home shopping season come spring. Attractive, well-priced homes are being snapped up quickly, while many of those that have been lingering on the market are seeing their asking prices cut as sellers gauge market temperature. So a few important bullet points when it comes to home values. Now, according to Redfin, we ended last year up 4%. Okay, so we ended last year up 4%. Let's see what Zillow has to say. This month, the typical home in the US was $344,159. The typical monthly mortgage payment, assuming a 20% down payment, was $1,760. That is very unrealistic because it does not include taxes, which pretty much everyone pays, and homeowners insurance, which also pretty much everyone pays. Home values are up from a year ago level in 47 of the 50 largest metro areas. That's crazy. Annual price gains are the highest in Hartford at 12%, San Diego at 9.6%, Providence at 8.3%, Boston at 8%, and Los Angeles at 7.4%. And I would encourage you guys, see what they're up from peak. Most of them are down from peak, most of them. Now, home values are down from a year ago in only 3 metro areas. Number 1, New Orleans, massive drop in New Orleans at 8.2. So New Orleans is, according to Zillow, leading. As far as Redfin, San Antonio is leading, and they don't even have New Orleans on there because Redfin is not accurately reporting their data. Go to Redfin right now, go to New Orleans, you will see New Orleans is in the gutter right now on Redfin. So good job, Zillow, for acknowledging that. Now, San Antonio is down 3.2, Austin's down 6.2, and Jacksonville, it's up 0.4, and Dallas is up 0.5. Now listen to this. Home values climbed month over month in 4 of the 50 largest metro areas in January. Gains were the biggest in Riverside, that's California at 0.2, San Diego, also California at 0.1, New York at 0.1, Las Vegas at 0.1, and Miami was even. So not much, right? Now, home values fell on a monthly basis in 45 of the biggest metro areas. And you guys, this is so hard to read. I mean, one hand, I'm saying, you guys, be careful for the data. We had a slight rebound, so be careful. You're going to hear a lot of noise like, oh, people are coming back, fear of missing out. But the reality is we need to remain patient and we need to remain calm. And if you think about it, in 45 of the 50 metro areas, 45 of them had month over month decline in prices. The thing is, guys, is we need that to continue in 2024. 1 month is not going to cut it. Now, the largest monthly drops were in New Orleans at 1.1, Minneapolis, what? At 0.8, Buffalo, what? At 0.7, Cleveland at 0.7, and Pittsburgh at 0.6. And that's the trends we need to see continue, because obviously homes are overvalued. The typical mortgage payment is up 7.2% from a year ago. Redfin says it's 9%, but has increased double since the pandemic. It is up 103% since the start of the pandemic. Think about just how wild things are. I want you guys to think about what the housing market was 4 years ago. Do you guys remember? Like, we could purchase houses about 4 years ago for less than what we were paying in rent. Now it's 52% on average more expensive to own versus rent. That's upside down. We've never been in a more toxic housing market. If you are going to purchase, you got to make sure you're going to purchase with fundamentals. And because of the lack of fundamentals in the market, you got to make sure you love that property with all of your heart's content. And it's not just a honeymoon phase thing, because you're going to be locked into that house for a considerable amount of time, in my opinion. Now, take a look at the home value forecast. So you guys can see that we had the drop at the end of 2022, but we had this rebound, and home values have started to drop since about September. They have started to drop. You guys see that? So they had, and they started to go negative. Yeah, you see September. So September to January, home values have been going down. You see that right here, but look at, there's the bump. Now, they didn't talk about this. That's surprising to me. The same thing with Redfin. Redfin also didn't talk about that. But I'm talking about it because I want to warn you that they will eventually start talking about it and adding to the fear of missing out. So you got to be cool. But even though it went up month over month, it's still not in the positive according to them. Do y'all see that? So home values since September have been going down. You're also going to see that in the Case-Shiller that only tracks 20 metro areas, but there's this right now. And I also want to point out that you guys can do this drop down if you want to look at your own metro area. If I were to select Austin, you guys can see Austin never even rebounded. We have a clear peak in Austin, and it has been just, it kind of wanted to rebound for a few months last year, but it didn't, and it has been going straight down. I mean, Austin's in super bad shape. Austin continues to go down and plummet. So keep your eyes on Austin. That sucker has been, in my opinion, crashing this entire time. Now, inventory is very, very important. Here's what Zillow has to say about new listings. New listings increased. Sit down for this, okay? Sit down. 43.5% month over month. Inventory, new listings increased 43% month over month. Amazing. But even that massive jump up is relatively small compared to pre-pandemic January norms. New listings rose 66% in 2019 and 63.4% in 2020. But what about 2021 and 2022 and in 2023? So this is good, but it's still not at that 66%. Okay, so we're still not there, but this is the great trajectory. Now, new listings are up 5.8% compared to a year ago. The problem is, guys, is we still have historically low inventory for existing homes, affordable existing homes. Let me be very specific about that. Now, new listings are, even though that's up Y over Y, right? Even though that's up year over year, new listings are down 25% pre-pandemic. So we need, according to Zillow, approximately 25% more inventory to get pre-pandemic. And I want to make a point. Right now, according to Black Knight, the metros that they track, any metro that has more inventory than they did pre-pandemic or the same pre-pandemic has year-over-year price decline. Go to Black Knight and see for yourself. Again, every single metro that has as much or more inventory than they did pre-pandemic has year-over-year price decline. Take a look. Go to Black Knight. See for yourself. Metros where sellers are showing up more stronger than last year are San Diego, where new listings up 27% annually. Miami's also up 21%, and Riverside's up 20%. And if you guys go to Redfin, you'll see San Diego spike up from January to December. You'll see from December to January, I'm sorry. You'll see the same thing in Miami and San Francisco. It's really, really crazy what's happening. And the market is heavily split. So if you want to go to your individual market, just go here, you guys. Again, you can have the drop down. Let's take a look at Austin once again. It's a little bit difficult, but you can see we're actually lower in Austin starting out the year. You can see that. So that's crazy. New listings are actually down year over year, which essentially is saying that Austin has had about 6 months or more of supply for over a year. It's just really crazy. So Austin inventory is not going up, but the prices are still going down. That's why you have to really hone in on where you live And even more specific, guys, you got to look at subdivision. You got to look at subdivision. So important. But if you want to look at the big picture, overall, we're up 5.8%. Now, that's beautiful because this has been going up since June, and it has been going straight up. So overall, inventory has going up, except in the top, one of the top declining metro areas, Austin. But remember, Austin has had pre-pandemic inventory for a while and 6 months of supply for a while as well. So these are great trajectories, absolutely great trajectories. This is exactly what we want to see from an inventory level. So hopefully that growth will continue, because when we have inventory, prices will drop. We know prices will drop. In fact, prices are only high because of the lack of inventory. So when you take the lack of inventory out of the picture, prices naturally go down. And think about this, you guys. We have a triple whammy as far as the asset bubble. When we compare the GFC bubble to right now, home prices went up even more. Home prices went up in half the time. That's the bad one. So home price, we have a bigger bubble in half the time. And this housing market bubble, you guys, is more artificial than the GFC. It's more artificial because of the money printing, the stimulus, the PPP, the direct payments into our checking account. It's even more artificial. And that means that there is even higher lack of fundamentals with the bubble that we have right now. Just saying. Comment whether or not you agree. Okay, comment whether or not you agree. Am I missing something here? Comment below. Now, taking a look at total inventory. Inventory in January increased by 1.5% from last month. So again, these are winter months. Normally inventory goes down. This is bucking the trends. Inventory is bucking the trends. That's good. There were 3.2% more listings active in January compared to last year. So this is saying, because Redfin's not saying this, Zillow saying year over year, we have more active inventory than we did last year. That's pretty awesome, right? Third bullet point, inventory levels are still 37% lower than pre-pandemic this month. So that's pretty big. Inventory fell year over year in 30 of the 50 major markets. And that's what I'm saying. You guys got to watch your market. You got to watch your market, because look at Las Vegas. Dang. So Las Vegas is down 29%. Dang. That's probably why I'm going to tell you guys right now, Las Vegas rebounded in 2023. Las Vegas so far has been resilient when it comes to existing homes. Literally, look at it. Las Vegas was like one of the leading metro areas of price decline towards the end of 2022. But you guys, they rebounded from existing, not new homes. I'm talking existing. That's pretty fascinating. Now look at Seattle. Same thing with Seattle. Seattle was being gutted, but they rebounded. Now, one of the reasons may be the inventory is down 22% year over year. That's astonishing. Look at Washington, D.C., same thing. Washington, D.C., 21.8%. So inventory fell year over year in 30 of the 50, but in 20 of the 50, it's up. So that's great. So good news here is we do have more active inventory year over year, but not quite pre-pandemic. We need to be really at this level. We need to be at 1 million. Okay, we're at 1 million. Well, this is Zillow. They look at it a little bit differently. Zillow, we need 1.5 million. But I mean, gosh, guys, I mean, things are changing like crazy. Let's take a look at competition. Attractive listings are moving quickly because they're priced right. Listings that sold in January did so in only 29 days. That's slower than the normal rush in real estate while mortgage rates were low, but 19 days faster than pre-pandemic norms. So it's up, but we're not, again, not quite at pre-pandemic. That's where we need to be desperately. However, mispriced, here's the thing, mispriced or poorly prepared listings are lingering on the market. Sellers are turning to price cuts to try to meet buyers where they're at. The share of listings with price cut is relatively high at 20.9%. That's a lot. This goes on. 26.4% of homes sold above their list price in December. That's up 2.5 points compared to last year and up 8 points compared to pre-pandemic averages. 0.08%. The share of homes that sold over the list price rose in 36 of the 50 largest metros. And that's what I'm trying to warn you guys about. You see that here in San Jose, San Francisco, and Los Angeles. You guys look at San Francisco, look at Miami, and they just hit new highs. They just hit new record high in January, according to Redfin. That's freaking bonkers. But again, we're looking at competition. You want to look at days on the market. The longer a listing is on the market, generally, the more negotiation power you have as a buyer. If you want to go and negotiate and will and deal on a listing and it's only been on the market 1 day, it's very hard to do that. But if you want to will and deal on a property that's been on the market for 60 days, generally it's a lot easier to do that. So understand how your purchasing power and leverage works as a buyer and what to look for. So the least competitive market they're saying is Austin at 72 days. And then the second one is San Antonio at 57 days. 2 Texas metros. Now, New Orleans is being gutted right now. New Orleans is melting down as far as prices. You guys study New Orleans. That's the third least competitive market at 55 days. And then we have a Florida. Florida is changing. It was resilient in 2022 for sure, and in 2023, but 2024, you guys are going to see it. Starting with Jacksonville, that's the fourth least demand at 46 days. And then we have New York at 43, and then Miami at 42, and then my home city of Houston at 42 DOM. All right, now this next map is going to be the share of listings with price cuts. And it does a map, and I just really want to focus on Florida because remember how resilient it was. But look at it now. Florida, this is good. This is the lead. This is going to lead to price cuts, right? To sales prices being lower. The price cuts are exploding in Florida. Look at this. Florida is in trouble, you guys. They are in trouble. It's probably those property taxes, the insurance, all of the costs to own right there, finally catching up. But it's just such a heavily migrated, to that it took a time. But look at that. And then look at some of these other like central areas. This is great because they've been strong. These places have been strong. So hopefully that will change in 2024. Now you have Texas as well. Texas with a lot of price cuts, but nothing compares to the state of Florida and the massive amounts of price cuts that are going on in the entire state. That is crazy. Now, when it comes to pending sales, newly pending listings increased to 25% in January from the prior month. So that's the bump I'm talking about. Newly pending listings decreased by 3.8% year over year. So it's down year over year, but it's up month over month. And that's what I want you guys to be careful about. I want you to be careful about the narratives because it's only a matter of time before they really start pushing the fear of missing out. Now, last but not least, you guys look at the rental market. A lot of things are important. A lot of things that we want to happen, are going to happen because the rental market is shifting. And I'm going to tell you guys, the rental market is going to continue to be tampered with and destroyed because of the new construction. They have more new listings of rentals coming on the market than they ever have had. Plus the investor demand, the rental market's really bad. But I want to show you guys the trajectory. So the trajectory has been like kind of sideways since September. It was going down greatly. This is just percentage, okay? Now, as far as like cost-wise, it went down, but like it went up, but only like $3. So it's kind of been sideways since about the end of 2022, but we need this sucker down because look at that run up. So depending on the metro, some metros, the asking rent double-digit decline. The more that rental markets decline, the better it is for people like us on the sideline trying to own the home that they live in. Watch the rental market. So once again, guys, what is the solution? I'm going to tell you right now, the solution is you, or at least it starts with you. Now, obviously, we need prices to be better. We want payments to be better. We want more inventory, but none of that matters if you're not ready to buy a house. It's okay to wait and to rent, but wait with the purpose, as Orlando always says. So again, if you're looking for a solution, I have paid my own money to give you guys a segue into empowerment. I have a free home buying course. You can go into my description. You can click it. It's for free. I don't want anything from you except empowerment. I want you guys to learn to empower yourself and to be proud of yourself for that. And other than that, guys, if you're out there investing in real estate, you guys already know I wish you luck and I hope you win.